Hello and welcome to another update video about Polygon MATIC. Yeah, not much change really. It is in the support area. It should ideally not drop below $1. If it does, things are going to get a bit difficult for MATIC and we might look at a deeper pullback. But so far, the setup is holding, yeah, as this one did. But ideally, we're turning around really here at some point. As long as we stay above $1 is fine. Below $1, we will have support at around, well, the previous swing low here, which was on the 10th of March. That's the 94-cent level and then 87. But then it's really getting difficult, and I wouldn't be surprised to then head back into the scenario down here where we're going to hit the support area and possibly have another chance to turn around there. And that would be between 76 and 68 cents. But in terms of looking at scenarios, I mean, really, ideally, it's turning around there. Yeah, I mean, there are different possibilities with this chart because it is, to be honest, it is quite messy. It's a chart I absolutely dislike, not because it's a bearish chart. It's just a chart that looks a bit unreliable, really. You know, you've got this strange structure here on the chart, this sort of broadening megaphone structure, broadening wedge basically. Then you have these strong spikes that don't really fit in. Best I can really tell, I mean, there are a couple of options. I mean, I'm still counting the wave 1 here, which occurred between June and August 22, and then this is where different scenarios get possible. So we could say that we had a 1-2, right? And then here another 1-2 setup. And this might be another 1-2 setup. Well, that's possible. Then this setup should hold. We should ideally hold the $1 level. Or this was a wave 1. Wave 2 is going to finish, or wave 2 finished here. Okay, so wave 1 up, wave 2 there. And it was an A wave down in 3 waves, an overshooting B wave. And this was the C wave, which did hold, right? And that's possible. Yeah, and I mean, I don't want to give you too many options here because it's getting extremely messy then. I mean, another option, just to highlight what would be the option if we drop below that $1 level, or, you know, even below 87 cents. Well, you could still say this was an A wave, overshooting B wave. Yeah, always in 3 waves, A, B, C. And then we have a C wave, but the C wave, the way I counted it here, is a running flat. So basically the ABC is a running flat, which means you have an overshooting B wave and the C wave stops above the A wave. Now that was a trend reversal area that worked, but it could very well be that this C wave extends out lower in a so-called expanded flat. In an expanded flat, the C wave would go below the low of the A wave. Now I find that fairly unlikely given the length of the C wave that would be needed, right? But it's possible. Then we would have here wave 1 of C, wave 2 of C. We would now be doing a wave 3 of C, a wave 4 and a wave 5 of C, and the C wave would end here, and then also the wave 2 would end somewhere down there. But you know, there are just too many options. I don't want to, you know, we can only really trade and should really only trade what's in front of us, which is this setup. Now, I'm not telling you to trade it, just mean, you know, there are tons of options here. They are all, yeah, I mean, the long-term chart is really good. The short-term chart is decent as well. It just is a little bit unreliable due to these overshooting B waves, and they are not great. Just be aware of the $1 level. If we lose that, we head back to that 95, 94, then 87. Below that, I will have to be in favor probably of an expanded flat with a long C wave. Now, in terms of a long C wave, there's nothing bearish on this chart until we really drop below 48 cents. Because if I'm measuring the wave 1 high of August 22 and then measure the 78.6 retrace off there, that's the 48 cent level. As long as we're holding that, we don't really need to plan too much for new bear market lows. But that is sort of, you know, there's quite a distance from where we are now to that 48 cent level. So it just tells you a lot about risk management, and that really, to get a confirmation we're heading into new bear market lows, it needs a 60-70% drop or whatever. I mean, how much is that from where we are now? Wrong tool. Oops. No. What did I do? 1 sec. So So 48 cents, yeah, I mean, you talk about here 55% drop or something. So until it has a lot of space, you know, a lot of buffer. And from all of, as long as we're holding above 48 cents, it can restart basically a third wave rally. So, but ideally, you know, what's directly in front of us is this, is this $1 level that needs to hold ideally in the short term for the imminent breakout scenario, yeah, the imminent setup. And if this third wave works out imminently, and again, it's fairly reliable as long as we're holding $1. Below that, it's not invalid, but it will be unreliable. It will be invalid below 94 cents. Or let's say below, yeah, 94.5. So it's the 10th of March low, right? If it works out, it should take us to at least 151. Yeah, and that's sort of the situation we're in. And it made a lower low here compared to the A-wave low. On the indicators, I'm just checking, do we see any bullish divergences? I don't think we do. Well, yeah, we do. But between waves A and wave C, you see a bullish divergence on the 1 hour. That's typically a good sign that this is, well, at least it supports the wave count, right? You have it here with a histogram as well on the MACD on the 4 hour, but you don't have it on the RSI on the 4 hour. So yeah, not crystal clear. So ideally, we're turning around above $1. You can draw a trend line to get a bit of a feel for when this downtrend is over. And I think a break of the trend line would be a very first indication. It's never confirmation, but it's a first indication that things might be shifting. You could probably get away with calling that some kind of a descending wedge, but it's not great. So it is much clearer on some other crypto charts. It's probably not a descending wedge, to be honest. Nah. But a break of the trend line would be a first indication trend is shifting. And yeah, I mean, then it's all about having resistance at these spikes. Yeah, so first resistance will probably, or first meaningful one will probably be $1.12. And we've got here 116, 122, and the most relevant one will be up there around the 125 area. If we break above that, we can rally to 150. Yeah. All right, that's my update about MATIC. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.